All right, as I said, very busy show today, so let's move on. Our next guest is Luke Slivkoff from Primary Residential Mortgage, talking today about what else? Mortgages.
Yeah.
Are rates pretty good today?
Rates are good.
Yeah.
Historically, they're at an all-time low. Even though they did trend up a little bit last year, I think it's still a great time to buy.
Are they going to go any lower, do you think, or have we just about gone as low as they can possibly go?
You know, all the major outlets, Fannie Mae, Freddie Mac, National Association of Realtors, they all predict higher rates, unfortunately.
So don't wait.
Don't wait.
Yeah.
You know, they expect it to go around 5% by early in part of next year.
Uh-oh. And what comes after 5? 6. Well, let's hope not. But 3s and 4s, unbelievable rates for a 15 and a 30-year mortgage. What are you selling more of now? You doing a lot of 15s?
No.
No.
Most people probably still doing the
Still
traditional
want
30.
the 30s?
Yes.
Why? Because if you get a 15, your monthly payment's going to be higher.
Correct.
Even though you're paid off in 15 years, but...
And there's a way that you can take a 30-year loan and go ahead and make those extra payments to essentially make it a 15-year without having the burden of, contractually having to make that extra payment.
If you make a little extra on your principal payment every month, you knock years off that 30-year mortgage, basically, right?
You do. You do. If you make at least one extra payment, you generally will knock about 4 or 5 years off.
Wow. Which can save you
Thousands.
thousands and thousands and thousands.
Yeah.
Okay.
And one reason you don't want to wait either is because for about every quarter percentage points in rate equals about $28,000 or so in extra interest that you'd have to pay.
Wait a minute. Say that again. For every quarter percent.
Yeah. On an average loan, costs you about an extra $28,000.
So for every 1% jump, you're talking about $100,000.
$100,000
that you'd pay over the life of the loan.
Correct.
Wow. You've just convinced me. I'm refinancing today.
Well, there we go.
No. Are you busy right now, or?
Things have slowed up, but we are getting busier again. The early first 3 months of the year were slow, but after April, things really picked up.
Yeah.
So we're back.
Is it the time of the year, or is it economic conditions? What causes those peaks and valleys?
Usually, you see summertime. It's the purchase market that takes off. Refinances have pretty much all but dried up. Due to
Really?
Yeah.
You mean everybody's refi that can refi? Or?
As far as the government programs that you hear about, the Home Affordable Refinance Program, HARP, yeah, that's pretty much done and completed.
Meaning everybody's done it, or it's not available anymore?
Well, it's available.
It's available, okay.
But most people that could qualify have already taken
Have looked
advantage
into
of
it. Yeah.
Yeah. So now we'll go in the summertime, and then in the winter. Usually in the holiday seasons, the rates do jump up a little bit. I think it's maybe all the money goes into the Christmas season. I don't know, but it seems to have rates to go up a little bit in the winter.
So don't wait till wintertime to buy.
Don't wait, yeah.
Do it before then. Okay. What other services do you offer there at Primary?
I wanted to just mention a couple things in case we didn't get the memo. But as of January, the government has basically leveled the playing field for all lenders across the country. So in times past, we wanted to go ahead and the government wanted you to shop around, right? Call up this person and call up that person. But as of January, they've essentially regulated all the lenders' rates.
So what does that mean?
So what that means is we're all tied to an index called the APOR, Annual Percentage Offer Rate. So all the lenders are going to be really close, like a gas price, one to another.
0.9.
0.9. Yeah, so you can talk 4.99 to 4% to 3.99. I mean, they're all very close. So that's one aspect.
So I don't have to waste a lot of time going to a lot of different places.
Yeah, so the rules have changed.
Okay.
So unless if something's really out of kilter, then you need to ask questions like, why is it that way? But
Wait, how would I know if something's out of kilter?
If the rate is tremendously different from one place to another.
Okay. Why?
Yeah, exactly. Why? The second one is the fees. So the government has capped all fees at 3%. So nobody can exceed that anymore. Otherwise, it's not a qualified mortgage.
Really?
Yeah.
So is that 3% of the selling price?
Yes.
Or?
Yeah. So
what was it before? Anything? Anything goes?
Pretty much.
Wow.
Well, it actually was at 6, but
6.
But they've cut it in half.
Well, has that hurt you guys?
No.
No?
No.
You still make plenty of money off 3%, right?
Yeah, that includes lender fees, title, escrow, notary, government recording, appraisal fees, et cetera, et cetera. So everything except the real estate commissions are in that fee.
Okay. Well, obviously the commissions would be considered separately.
Yeah.
Right.
Yeah. So
All right.
separate. So that, and then, last I looked, the third part was all the programs. So 96% of all loans are being sold to the same three entities: Fannie, Freddie Mac, and Ginnie Mae. Yeah. So we all pretty much have the same. 96%.
Wow. Who's buying the other 4?
The other 4 are what they
Private.
call, private money, jumbo loans, things like that.
Yeah. Okay. Where's your office? How can folks reach you?
We are in North Fresno, off of Ingram and Nice. The phone number is 559-400-6921, or you can visit us online at primeresvalley.com.
primeresvalley.com.
.com.
All right. Luke, thank you for coming in today.
Thank you very much.
Appreciate it.
Yeah.
All right. And we'll be back with more of CentralValleyTalk.com.